Yeah, boy. You're never going to see that. Too bright, I guess. I got my buy low, sell high cufflinks on, or at least I'm putting them on. See? Daddy wears cufflinks. Let's get on with it. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, my friends. Como televo? Jumbo. Jumbo. Ohio. Good morning. How you doing? Hang on, I got to get my left cuff link linked to my cuff. Guess in France they call it link de cuff. For some reason they sound Italian. Hang on. Oh, come on, get in there. No, get in there, come on. Oh, the left one's always the most difficult. There we go. Ni hao ma. So good to see you. Good morning. How are your pips going? That's right, Brad. You know who's the boss? The one with the cufflinks. Or the pretty pink jacket. One of the two. So how are you pipping going? Wow, that crazy Fed meeting, huh? Whoa, it was crazy. It was out of control. So funny how the media just gets everything so hyped up. Everyone's amped up. Oh my God, the Fed's going to do something. Of course, you're like, nothing. Great. So, wowzer. So that's good. That's why we do fundamental analysis. We don't get distracted by news. I mean, news is interesting, I guess, but only to the point, wow, little millennial going on, only to the point where it affects our bias. So we can filter a lot of things out pretty quickly because we know how it fits into the context of bias. News is news. Bias is based on fundamentals. Fundamentals is not news. So anyways, it's good to be smart money, isn't it? Yeah, it's nice to be smart money. So welcome to Forex.Today, the YouTube community of almost 15,000 foreign exchange traders that love Forex. They love trading currencies. They love the leverage. They love the liquidity. They love the taxation policy, right? What else? They love the fact they're marked to market. Oh my God. So I covered that a day or two ago about being marked to market. Such an advantage. Such an advantage. Why would anyone else? Why would someone want to trade something else, right? That kind of thing. Oh, but Wayne, if I get into real estate, I can get an internal rate of return of 15%. What do you mean your internal rate of return? What's your absolute return? Forget your IRR, buddy. Where's your absolute return? So anyways, whatever. I digress. I love being a currency trader. I've been a few things in my life, but Forex, man, is the best one. So I hope you fall in love with this this industry, this career, this profession. Actually, that's weak. Oh my God. That's the worst I've ever seen. I might have screwed up my coffee machine. The other day I hit cappuccino, like, make me a cappuccino. and it spit out like rotten milk that had spoiled inside the machine. I'm like, oh no. I don't drink enough cappuccino. So anyways, now it's spit out the worst coffee. Oh no. Anyways, we all have our troubles, right? I got 99 problems, but a pip ain't one. So anyways, welcome to Forex.Today, and I'd like to thank our sponsor, TradersWay.com. They're a foreign exchange broker. You're a foreign exchange trader. And they're asking, by sponsoring our community, they're asking you for an opportunity to earn your loyalty and respect. They're asking to develop this relationship with you up front through education. Now, one day, perhaps if these webinars are helpful and you do develop skills and confidence that you need to trade real money, then they're hoping you'll pay it back, right? You'll pay it back by opening up a live account at tradersway.com. You go to the bottom right-hand corner, it says open an account. Takes about 15 seconds, and boom, and you're in the back office. Download MT4, MT5, CTrader, ECN account, variable account, fixed account, whatever you want. It's your way at Traders Way with Trader Wayne. Hang on, I can't drink this crap. Life's too short to drink crappy coffee. Hang on. Yeah, boy. That's right. You got to do it proper, right? You got to do it proper. Well, where'd you go? Huh? Oh, why can't I do this? Where is it? Things backwards. Not bad, right? World's worst cameraman. All right, so I guess I'll be a Forex trader. Ooh, I guess I'll be a Forex trader, not a cameraman. All right, cool. Well, congratulations if you're a cameraman. I'm not coming after you. All right. Not quite right, but anyways, we got you. So, nice. So here we are. Read the tea leaves, my friend. US dollar down, yen down. That's good. I like that. Swiss up? Don't like that. Kiwi down. It's been down for a while, so I don't like that. Aussie down, CAD down. So all commodity plays are down. Pig up and euro up. Cool. I tried to explain what what you're seeing here. I tried to explain this a couple of weeks ago, maybe 3 weeks ago. So I'm not sure if you remember. But the way I read these tea leaves is the dollar's down, and that pushes up euro and pound. Those are the first things to go up when dollar goes down. And it has to do like, I took this class on like international M&A deals, and there's this idea of closeness. It doesn't have to be distance per se. It has to do with culture. When you expand internationally, you're best not just, so it wasn't just mergers and acquisitions. It was a class on scaling, right? So you could scale by building or buying, for example. So anyways, in that process of moving your company global, it's best to go to countries that are close in culture and language and such, not so like, for example, if you're in the United States, you probably have an easier time expanding to Canada versus the United States. And you'll say, well, why? Well, the cultures between those two countries are more similar than between Mexico and the United States. Things like language and shared cultures and stuff like that. And so there's actually a tie here. When the U.S. stock market gets too expensive, it's cheaper for Americans to buy stuff overseas, in particular other stocks. So you rotate out of some of your best performing stocks, you go to cash, and then you're like, you can't buy back into the stock market. I mean, you could rotate into a different sector that, like I said, financials or something 3 weeks ago. But in this case, someone said, well, why don't I just buy the FTSE? Why don't I just buy the CAC? And they rotate they stay in the equities industry, but they go in other places. In this case, the cultures, the closeness between Europe and Great Britain to the United States are stronger than any other, right? So there might be some of that going on. At least that's in my theory. Everything else is risk off, like commodities, like Aussie, Kiwi, and CAD coming down hard. That's risk off. But pound dollar going up, euro dollar going up, pound yen going up, euro yen going up, that's risk on. So it's like, you got to pick your battles. So I'll give you an example of picking battles. I got knocked out of 2 of my yen trades, and I did them on Sunday, if you recall. And Aussie, this wicked move down, Aussie came down and knocked me out at break even. I can't remember where I was. But anyways, it saved me from a negative 40. I could have stayed in and whatever. So I got knocked out of this one, break even. Kiwi, I lost 50 pips. And if you remember, my stop was, I don't know, somewhere there, but I lost it. So negative 50, 0. But right now, like on my pound, the one that's left out of the 3, 135. So I'm still up, I don't know, 85 pips for the week out of those 3 trades. Okay. And I don't know, I guess, I don't know. What can I say? So all I can say is, what can I say? So at some point I realized, no, where's my drawing tool? I guess I have to open a new one. At some point in here, I realized that all the yen pairs were under threat. And since I had one that was already pretty negative, I think if you remember yesterday, it was negative 40 or something. After the Fed meeting, it was negative 35. Like, oh my God, Kiwi yen moved 5 pips. All right, here's my drawing tool. And then they started to deteriorate. And I'm like, you know what? I've been in it long enough. Here's this one. Okay, and we were kind of in here. So I said, you know what, I'm going to jam my stop. And you know what, I probably got very unlucky. It was probably very close to here. I can't, no, it was break even, right? So, oh yeah, so I got knocked out on this red candle. And I lost 0, or negative 3. I love losing negative 3. Love it. So anyway, so I picked up a negative 3 on that one. But Kiwi, I took my full risk on that. So I don't remember now. This must be a monthly play. Let's just do it this way. Swing trading bullish. Yeah, that makes sense. All right, so let me zoom in. And I was long in here somewhere, and I think my stop was in here. No, it was below that. Anyways, I don't know, somewhere in here. Anyways, I lost 50 or 60 on that. I think 50 pips, $60. Cool. So anyway, so I'm up still a little bit. Thank you to this one. And of course, this one worked really well. Okay. This is what this represents here is the bear's challenge. The bear's challenge. We did this on Thursday, I think. I said, if you're a bear, you're going to play the lower low, lower high scenario. That's what this represents, right? At the open. And sure enough, a bear got it. Of course, I'm a bull, so I bought the same thing a bear would sell. And there you go. I could have been very wrong, and I would have lost a little bit of money. So what? Who cares? Get over it. In this case, I wasn't a little bit wrong. I was much more right. Cool. But that's me betting on my trend. I'm a trend better. Okay. You can see it's pretty easy. High, 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 low, roll reversal. Nothing complicated, super easy, letting it run. Okay. Now, if I didn't let my winners run, I would suffer, I believe. I would suffer. Yeah, this is up like a $1.35, $1.40, whatever, 135. Yeah, I'm up 150 pips. Boring. Okay. Um, but at least it paid for my break even and it paid for my loser. Okay. So, right? So, even with the loser, I'm probably going to still do all right. Let's just put it that way. Does that make sense? So now we've lived it all the way through. Right? From setting this up last Thursday. So last Thursday, we said we should buy it around this 135 mark, and we're going to drive it up to here. Now, I typically don't actually expect it to go this far. That's how it normally would. Okay. Okay. So, but of course, we're not in a normal market. So, right, you have to plan big, but expect small. Okay. But my point is, we planned three or four or five trades on Thursday, took them on Sunday, right? So since Sunday, Monday, and Tuesday, I showed you how I managed them. I told you when I would move my stops to break even and when I would not, which I did. And by moving my stops properly, I got knocked out of one at break even. The second one, I never had an opportunity. It just didn't work out. And it was weird because the other things went up and that one went down. So I got caught in a relative strength tsunami, right? But the third one worked fine. It paid for my loss. The other one paid for itself. So I got 3 opportunities. It didn't cost me anything. And by letting my winners run, it helps me make my math work. Okay. Okay. Manuel says, what time frame do you want to use the currencies? Well, it depends on what time frame you want them to report. Do you want short term, medium term, or long term? If you want long term, make the time longer. If you want short term, make the time shorter. Okay? Cool. Okay. And of course, don't try to copy what I do. Copying me would deprive you of your own destiny. So ask yourself, what analysis are you doing? So for example, if you're scalping, looking at the long-term trend would be silly. If you're swing trading, you wouldn't have your indices set at like 15-minute charts, right? Because what it's telling you is the euro strong over the last 2 or 3 hours. Well, who cares? Who cares? You're going to be in this trade for 2 or 3 weeks, right? So adjust your indicators, right? Every time you get in the plane, you have to adjust your altimeter. Okay. So anyways, there we are. So I hope that was a positive lesson. I mean, it's not a lot of money, but how to set up a trade in advance, how to take the trades, and then how to manage the risk, and of course, an example of letting the winners run. There's lots of little micro lessons in there. And let's see if we can get through $1.37, then we go to the next level. I don't really expect much. Like I said, plan big and expect small. So one of the things you can do is you can open this up and get your conservative target. Okay, and it says $1.37.25. Okay. And that might be the case. In my mind, I expect this, but we don't know. Thank you, Manuel. Hey, buy me a bottle of red wine sometime. I'll put it in the cellar. I'll hold it for 5 years and then toast your huge success. Peter says, what would the tactic when the markets trend above the M4 and R2 on a monthly? Readjust your pivots to the future period. It doesn't happen in a standard basis. Okay, Peter? So it does happen, but it's not typical. So adjust your time frames, meaning set up next month's pivots and such. So like today, the swing trading group, we're going to get together and I'm going to have people plan out August. Okay? We're going to organize into groups of bulls and bears. And then each group of probably 6 or 7 traders, they're going to get in their group as bulls or as bears. Okay? So we'll probably have 3 or 4 groups of each, and then they'll get together and they will discuss as a team what the best opportunity for August is on one particular pair and what the trade plan would be, the entry and the exit and the price action probably involved and where the opportunities and threats lie. And then we'll come back as a team, as a group, and each team will do their presentation on what currency pair they chose as bulls or what currency pair they chose as bears, why, and then the technical plans that they have set up, all for August. Okay? Does wine age in a bottle? It does, actually. Yes, it does. The oak or Andeli, depending on your process, very much helps. But no, the chemical composition of the wine does break, and it also settles, that kind of thing. But yeah, it does. Same thing with my cigars. They actually ferment. Okay? They'll actually ferment. So if you think about it, in one of my cigars, there might be 5 different types of tobacco leaves from, let's say, 3 different countries. Each has a different soil, each has a different environment. Right? What they call terroir. And then in of that, whether the leaf is at the top of the plant where it gets lots of sun, or at the bottom of the plant where it gets a lot of minerals out of the ground, even the plant, let's say in the Dominican Republic, depending on where you pick, or if it was at the top, but they had cheesecloth over it, so it was sun grown in the shade, right? Shade. All of this will change the flavor of all these different leaves. And the reason there's different leaves is they provide, some leaves are just pretty, some leaves are strong, some leaves are, and then there's a blend to get like blending tea to get a certain taste. Then you wrap it all together, and then as it sits for 5 years in my humidor, the leaves themselves sort of blend into one through their own chemical process. And it's pretty amazing. Does it impact the cigar? Yeah. So there's a place like in London, for example, you can go and sit down in this fabulous lounge and in this giant walk-in humidor, and you can order a cigar from, let's say, 1965. You'll say, I'd like this Monte Cristo No. 2 from 1965. It's amazing that they last that long. They'll bring it out, you pay your $1,000, and you smoke your cigar. If you add it up, you're like, $1,000 is cheap. Because you're like, somebody held this since 1965? Or let's say you find that hard to believe. How about 1975? And you're like, that's still hard to believe. How about 85? How about 95? Okay? So I've had cigars that are 20 years old. Even 25, I think. So it's amazing, but someone had to care for it for 25 years. Think about that. 25, 30 years. I mean, whoever owns the business has probably sold the business and passed away, and they're on the second or third generation. Like, someone is still caring for that cigar. One bad day, that cigar turns to garbage. It turns into like newspaper. So, and and all of a sudden you're like, oh my God, you, someone had to care for this in this beautiful space, and I paid, $20 a year for them to store it for me, so I could smoke it today. You're like, easy, cheap, cheap, amazing. So, anyways, any chance of getting a link to your chart templates? Yeah, they're in the description below. Click on it. It's called metatraders.com. Wayne, my indicator toolkit does not have indices. Then you didn't pay for the complete toolkit. Okay? Barry's 8 hours into the courses. Awesome, dude. All right. Message in a bottle. So anyway, so Pig Dog's gone. Pig Yen. Beast. The Beast is being nice. I also want to point this out. Okay. I'm not on this one because if you recall, back on Thursday, if you're in the live swing group, if you're in the swing trading group, our plan was to have this fall and buy it at the open. So you could have front run this trade, but I didn't. Then the market opened here, right? It popped up pretty quick. You can see this is Friday, and then suddenly we're out of here. So I didn't buy it. I guess I could have waited a day and bought it here, or waited 3 days and bought it here. But by the time we got to this opportunity, my Kiwi yen was like minus 40. And I don't think my pound yen and Aussie yen were that amazing. So I felt like I was already exposed enough. I already had enough risk under those circumstances. So to add more would just be more potential downside. Man, I'm trying to draw this, right? Adding one more is just adding more risk versus doing the trade, right? So I walked away. Sorry. If the market had behaved differently, I would have behaved differently. So it's not my fault. I know. 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 How do you like them apples? All right. So that's that. Whatever. Let her go. Let it go. So let's move on. Now, exotics, like commodities, right? Now, these exotics very typically the exotics are exporters of commodities. So we'll look at this one. Commodities are dropping all across the land. And holy smokes! El Crusho. Okay. And I think there was a conversation we had at some point where I said, someone was shorting Euro ZAR, and I said, I understand why you're doing it, but you might be better off with the exact same theory, but you'd be better off on dollar rand. And check that out. See the difference? Much different, right? Okay, and this has to do, let me back this out so it's a little more similar. This has to do with the US dollar. That's it. It has to do with understanding macroeconomics more than technical analysis. It's the right idea, but you have to understand the flow of currencies. Right? And you'll say, well, Wayne, the economic data out of Europe is horrible. Yeah, I know. And the ECB's policies, and Yeah, I know. And Italy and Greece and Spain, Portugal. Yeah, I know. So therefore, euro's going up. You're like, well, why? None of it's good. Oh, it has nothing to do with Europe, right? And that's where you're going to have to get a grasp on things. This has nothing to do with Europe. This has everything to do with the US of A. Okay? Absolutely. Absolutely, Peter. Mm-hmm. I mean, think about it this way, Peter. Like the way that I made my own investment into education, I traded currencies, let's say at least 15 years, and I slowly taught myself macroeconomics through mostly osmosis, right? Staring at the charts for years and reading newspapers and and that's it because I never really read any books. So I had to like think my way into macroeconomics, and then I decided to go to Harvard and get a bachelor's degree in macroeconomics. So I did. So now I have a degree in macroeconomics. So you're like, so macroeconomics is the way to understand the flow? Well, I spent $100,000 on education just to make sure I did understand enough. Okay. My master's is in financial management. Nice. Very nice. Right? With a specialty in alternative investments. Cool. Some of you guys would probably dig some of the coursework. Like right now, so last week and the week before, I was breaking down term sheets with that venture capitalist offered to entrepreneurs, and I was comparing two different VC firms that were offering the same startup term sheets. Right, one is offering 3 million, one is offering 2.5. Which one do you go with? And you're like, oh, well, the money. No, don't even worry about the money. So you have to look at line by line by line by line by line. And it's amazing how little twists and turns in the contract will determine how, like, it could cost you $20 million because they had this participating versus non-participating. You're like, what? Oh, I didn't understand what that meant. Well, it cost you $20 million. So now I'm doing something similar, looking at the limited partnership agreements with investors into real estate, and that's also very, very interesting. The sort of the provisions that go in, things like, how do they participate? Do they get 1x back before they participate? When does the entrepreneur get paid? Are you offering a guaranteed internal rate of return? Is there a look back provision? All of a sudden, all these things will determine the outcome of your firm. And then, of course, I'm going through all of this thinking how much better it is to be a Forex trader. But if you don't know what you're doing, you could sign a contract and you think you're going to get rich, and you find out, well, all your clients are going to get rich. And you could literally do all the work, take the vast majority of the risk, and not get paid because you signed a bad deal. It's very interesting. Do I have a Twitter account? Yes, at FX Bootcamp. I think there's 13,000 followers. So anyways, very interesting stuff. That's why I mean, like, I think my next endeavor, now that I'm right at the precipice, I'm in the last 7 days of my master's degree. So I'm already like thinking about how to take all this knowledge and immediately dump it in a book so that you can get a Harvard degree on things like how to structure, relationships with your investors. Peter said, so a degree in finance is good? No, No, the primary reason I went to Harvard is to be a positive example and influence on my children. So that was the number one thing. So now they're literally getting ready to go to high school, and their young adult life, if you will, from the age of 10, from the age of 8 to now, they've seen me working my butt off and being an A student at Harvard in a degree program that is now essentially canceled and rewritten because they found it was too difficult. So they know how hard you have to work to do something that's impossible and come out superstar. Cool. Cool. Anyways, so I think some of you guys would like that. Maybe I'll do a book and a course and stuff like that on that side of the business, right? So you can see right away, like, if you are interested in raising money one day, usually there's a license and registration process to be regulated. So right? So you need to know what that's about, right? And then when you approach clients, there are very specific rules of what you can and cannot do. In the United States, if I was raising money and I'm a Forex fund, and I'm out by the pool at a cocktail party, and this potential client and I are having a conversation, and they say, "Oh, well, so what is it that you do?" I'd say, "Well, I can't tell you unless you sign this legal document. And then once you sign the legal document, I can tell you what I do." And they're like, "Well, screw you. I'm not going to, I just ask you a simple question." Well, so there's a lot of very interesting things that you have to be aware of. But like, what does your disaster recovery plan look like? Does anyone here have a disaster recovery plan? Okay. How about your DDocs, your disclosure documents? Oh, it's about, I don't know, 50 pages long. You got one? Right? On and on and on. All of these documents. What do these mean? And then ultimately, what contract do they sign with you? And what are you offering them? So once you know all of that, that's interesting. I mean, now you know. Now you know how to but then how do you negotiate with your potential investor so that they feel like this is an unbelievable deal and that they got to get on board? So how do you structure the deal in such a way, not just communicate the deal, but structure the deal in a way that is very unique from what they've seen? Right? So how do you negotiate that and structure it so they feel safe, especially in the beginning when you lack the typical track record. Like, for example, one person comes in and like, "Here's what we've been doing for 22 years. We have a staff of 5 full-time analysts and accountants, and we have a lawyer on the side that works part-time for us, and then we got 7 traders." And then you come up, you're like, "Well, it's just me, and I have a track record of success of 5 years, but I've never really been regulated before, never really traded other people's money before." And they're always going to go with the person with 22 years and a big staff and, all that kind of stuff. But how do you get in then and combat that? How do you protect your clients? What kind of clauses can you put in there? And the interesting thing is, in my research years and years and years ago, there's basically a standard operating agreement on the 80-20 split. And then, of course, your management fees and hard dollars versus soft dollars. That's all really standardized. But now that I've been studying venture capital term sheets, which I knew, but now I've really gotten into the weeds with it. And now I'm looking at term sheets that you would sign with investors into real estate. And then I'm doing this Harvard Business School thing to continue my research a little bit on alternative investments. And I'm sure I can look at other types, like if you're investing into a PE firm, if you're investing into a stock hedge fund, right? What kind of legal structures do they have for those, and what can I borrow from those other models and put into my Forex fund that no one's ever seen before and would just jump. And especially if you are one leg down compared to your competition. Now, I think, and I've said this before, in reality, when you go to raise money for your Forex fund, your competition actually isn't another Forex trader. They're not really going to go apples to apples and say, oh, well, this Forex trader has 22 years of experience and this one only has 5. Which one do I go with? That typically doesn't happen. So now, once you're able to do all that kind of stuff and actually be able to structure your deal, then there's the art of the sale. And that's where you have to realize you're competing with a boat. You're competing with his buddy's funny story that he tells at the cocktail party, right? You want to be so they would invest in you simply because they need a bragging story at the next cocktail party where they're like, oh, my guy Peter, my Forex guy. Oh, man, he's awesome. He's just crushing it. He's awesome. Look. And you've realized you're playing around with their 5 million and you're just a cocktail party story. But that's all they wanted in the first place. So Brian Frank is scamming you. He says you can be your own boss if you join his mining pool. Apparently you can earn $25,000 a week. Wow. That's amazing. So you're paying your customers $100,000 a month, but Brian, you come into our room and spam us? That doesn't make sense. You sound like a loser or a liar, one of the two. So, Brian, if you were paying your customers $100,000 a month because of your mining pool, why do you need to come in and spam someone else's live stream? Why wouldn't you just do this legitimately? Seems like you're full of shit, Brian. So anyways, thank you. Moderators deleted Brian. Thank you, Anthony. So you didn't see it, but he was spamming us and got blocked. So too bad. I could have quit my job and earned $100,000 a month with him. Too bad, so sad. All right, so there's the exotics. Yeah, totally, right? The problem is you will always find somebody desperate enough that they will believe it. They'll want to believe it. They'll desperately need to believe it. I'll never forget, and this is a million years ago. I'm at a nightclub. It's like 2:30 in the morning. And I'm watching this guy. I'm like, I think he hit on a girl dancing next to me. And he just straight up came up to her and like whispered something in her ear, and she basically slapped him. And I'm like, whoa, what did he say? So I watched him. And he went to another girl and another girl. And I'm sure women have had this happen to them, right? But anyways, went to another girl, another girl, another girl, another girl. I'm like, this guy is relentless. He went to every single girl in that nightclub and said something horrible to them in their ear, right? And then all of a sudden, he found one and they started making out. I'm like, son of a... So anyways, when you see these guys popping in and try to spam you about how you can get rich quick, right? You can make $100,000 a month. Oh, I'd love $1 million a year, 1.2 million a year doing nothing. That sounds so good. Of course, it's retarded. But if you ask enough times, you will find someone. It's amazing. It's absolutely amazing. And if you've been in sales, you know that, right? No, Guy, this guy, I'm telling you, I was so fascinated, right? I was just so fascinated. I remember like watching him for like the whole night. He must have asked 100 girls, hey, do you want to? And he, without blinking, you just go on to the next and on to the next. Just amazing. I was kind of keeping an eye on him, though, because I didn't want him to find, like, a drunk girl or something like that. Because if he was looking to take advantage of someone, those are That's when I get involved. I'll never forget one time, if you guys know the marina in San Francisco, I'm walking to a restaurant and there's a couple of my buddies. I think it was just three of us. We were going to meet a group of friends. So probably a sushi joint, right? Anyway, so we're just walking down the sidewalk and I saw a man hit a woman. And I'm just like, hold up. Like just out of the corner of my eye, we're walking down the street, whack. And I'm like, what did I just, and I just stopped in the middle of the conversation, turned back there, and they're like, what? So I show up, and my buddies are right behind me, and yeah, I threatened them, and they went away. They parted ways in opposite directions, and I was cool with that. But you're like, oh my God, what? So you, as a gentleman, you always got to keep one eye open. So that's probably what I was actually doing. But anyways. All right, so yeah, so we did all these yens. Who cares, right? Let's maybe look at the reverse. Like what I don't like is the Swissy strength. So let's do it this way, right? And let's see what's here. Do you see anything that's awesome here? Kiwi Swissy is the obvious one, only because Kiwi happens to be weak when the Swissy is strong, but it has nothing to do with this pair. You know, maybe that's an interesting topic to think about. So Swissy, Kiwi Swissy is coming down, and here's something to grasp. Almost nobody is trading this pair. Now it's kicking off the exact right pivots and stuff like that. Okay, that's fine. But remember, these pivots aren't magic. They're there for a reason. Okay? They're there mathematically. So sometimes it's traders actually selling off the pivots, but it's very often it's the math that's working. Okay? For example, you know, one standard deviation from the mean. You're like, oh my God, that's exactly last period's top. Well, yeah, that's how the math worked. It's no coincidence. That's what the math did. It said, oh, well, this is resistance. That's why we call it R1. Oh. So anyways, this is working because that's what the math is doing. But so to get that kind of, put that in your pipe first. And now second, nobody real, like percentage wise, out of, like for example, out of all of Forex, 40% of everything is euro dollar. Okay? That's 40% of everything, right? According to the Bureau of International Settlements. The central bank for central banks, and central banks are the bank for banks. So everyone's got a boss. Right? So what percentage of the foreign exchange market is Kiwi Swiss franc? Statistically speaking, zero, right? Less than 1%. So no one's actually trading this yet. This is moving, but this is Kiwi versus everything versus Swissy versus everything. Swissy happens to be strong right now. Kiwi happens to be weak, so this comes down, but it doesn't mean there's people trading it. And that's why, that's one reason, like, you notice that I don't generally do, or how about I generally don't do? I generally don't trade relative strength. And some people love it. Okay? In particular, those that are pure technicians, those that only do technical analysis and not fundamentals. Okay, and that's where they would look at the index that I showed you at the beginning. They'll say, "Oh, Kiwi Swiss franc down, gotcha," and they're on this and they're trading this technically. But in the back of my mind, I'm like, this isn't moving based on what you see. This is moving this way based on what you don't see on this chart. So you may be trading Kiwi Swiss franc because you've paired the weakest with the strongest, which is relative strength. But that's what was in this period. We don't know if that is going to continue because, the chart you're looking at doesn't necessarily represent what traders are doing. It represents the current flow of money. But that flow ebbs. When is it going to ebb? Because of this pivot? Not if no one is actually trading it. And again, I'll tell you, well, you're saying, well, someone's definitely trading that. And I'm like, well, the math works. Okay? The math works there. Okay? For example, if you looked at the top, which you can't see to the right, and you look at the bottom, okay, what does all of this mean? It's 50%. It's a fib retracement. How do you know that? Well, again, please make sure you take the courses so you understand the math. The R1, you should know what it is. The CPP, you should know what it is. And you should know the math of what this M3 is. What is the M3? What does it represent? How did you get this top? How did you get this bottom mathematically? And why do we even plot the M3? Well, you should understand, not just follow like, I only sell it there because it said it. If you did this in an uptrend, you would likely fail. So you need to understand the math, the reasoning, right? So anyways. So it's all an illusion, but you certainly could trade it. But I would rather trade with the true fundamentals behind it. Okay. Now, Kiwi is weak. There's no doubt. Okay. And Aussie's been weak and CAD's been weak. So we already know that from the beginning. Now, let's talk about what the world wants. Does the European Union want a strong euro? I mean, they can buy a lot of stuff from China for cheap. They can buy big screen TVs from South Korea for cheap. Right? Their laptops are cheap because of this. Stronger euro means you can buy more laptop per euro, more OLED TVs per euro. Okay? More Teslas per euro. Is that what Europe wants? Yeah, Cash, you can see that in the currencies. Yeah, for sure. What does Europe want, guys? Right, so what is it that Europe wants? What is Madame Lagarde trying to do? Literally, what does she want? What does the European Central Bank want? Now, don't say their policies. What are the policies designed to create? What do they want? Weakness, but what does that create? What are they trying to... euro increase exports. Okay. That's sort of a weakness and increase in exports are consequences, let's say. But it's true, if euro was weak, then Americans can buy BMWs and Mercedes for cheaper, stimulate the economy. They are trying to create inflation. Okay? So what's happening is the euro is going up, and that's deflation, deflationary. So they don't actually want this. Okay? And the shorter term move here is Swiss franc going up. What does Switzerland want? Do they want their currency to be strong, or do they want their currency to be weak? Remember, they export financial services, watches, and cuckoo clocks, and chocolate. And yes, I've actually been in Switzerland, in Zurich, and I was going on a picnic, so I need to stop for some cheese and some bread and some wine. And I'm in the store, and I'm looking around, and I'm like, oh, you know what'd be good? I wasn't even thinking about it. I think some Swiss cheese would be nice. So I look around. I can't find cheese with the holes on it. I can't speak Swiss German, so I can't read anything. So anyways, I go to the guy and that works there, and I'm like, hey, do you have any Swiss cheese? And he looks at me, and he looks around. He's like, it's all Swiss. Well, you know, the ones with the holes in them. So, jerk alert for sure. Jerk in aisle 3. Jerk in aisle 3. What an idiot. Yeah. He almost nunchucked me right there. So anyway, so Switzerland wants a weak Swiss franc because they export, and they export to Europe. So right now, this is good for Switzerland on the longer term, but bad for Europe. Okay? So Switzerland's happy with this. Europe is not. Yeah, it's true. It says there's 50 likes, but could you be so kind as to click the little thumbs up button? I hope it's not too much to ask. So anyways, we'll keep an eye on all of that. Oh, right on, Simon. Where are you located? I love good cheese, man. I love good cheese. So who will win? Well, if the Swiss franc gets too strong, they tend to try to weaken it. And when the Swiss franc is weakening, they like it. In fact, it's a good sign of positive global macroeconomics. So when everything is right as rain in the macroeconomic point of view, Swiss franc is weak, yen is weak, and dollar is weak. So who will win? Well, if it gets strong, the Swiss National Bank may come out and try to weaken it. Okay. Basel, yeah. Cool. Yeah. Yeah, I need to take my family to Switzerland. It's such an amazing place. So yeah. Yeah, man. Cool. Not this year, apparently, huh? I'm dying to travel, but I thought about it like I should just jump on a plane and fly to South Africa. I'm like, well, they'll probably let me off the plane. But then when I try to come back, I'll probably be quarantined for 2 weeks. You're like, 2 weeks is a long time to be quarantined. Right? I'm like, can I quarantine at the Ritz-Carlton? I don't know where you get quarantined. Where, at the airport? Like, oh my God. I've spent 24 hours at an airport, but I don't want to spend 2 weeks. So, anyways, so I love you, babe, but I got to jump. It was real. So if you join my live trading group, then you will be with us this evening. Again, we're going to do group work on planning the month of August based on our fundamental biases, or even just best guess on what August is going to do. One way or the other, you make a decision. So we're going to do group work and analysis and then come together and share ideas, which is really cool. So the way you join is you go to fxbootcamp.com and you pay money to take the video courses. After you do that, it'll say, hey, do you want to join the live group? Pretty simple. So you can do a combination of video training and live trading. But the group work, typically, like the live trading group, isn't really educational per se. I don't come out and say, this is a 5-8 cross and this is a but. No, you should already know what you're doing. Maybe you're not that great at it, but you should already know the basics. And we do a lot of group discussions about what we intend to do, like AKA planning. So it's actually a great way to learn. If you need a broker, tradersway.com. The link is in the description below. If you need a book, the link is in the description below. If you need my chart templates, the link is in the description below. There's probably links to, I don't know, other things in the description below. Please click thumbs up right now. And if you could, when the recording is available, please leave a comment. Yes, fortunate, we use Zoom right now. We've used multiple things, but right now it's Zoom. Yep. Yeah, I got some great ideas, Gary. I just haven't had time over the last 6 years. But yeah, I envision more and better. Let's just put it that way. Okay. Fortunate is the course or big parts of it included after the COVID offer. I don't know what you mean. It's everything. Whatever you're asking for, it's everything. You get everything. Yeah. So whatever everything is, it's everything. All right. So there's a pretty decent description on the homepage, fxbootcamp.com. So you can look at it and say, you get all of that. Zoom is all right. It sucks if you're a moderator. I mean, it doesn't suck, but it's just as bad as everything else. I'd probably get rid of it, except for I can do group work. But yeah. Yeah, so anyways, Gary, I've been busy for 6 years, but yeah, I envision over the next 12 to 18 months, radical upgrades to everything. Radical. Okay. Okay. Eventually, I'd like to teach you how to trade all kinds of asset classes. So imagine you're also learning a very, 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 very detailed real estate course. Imagine that. Not something that you can get your real estate license with. You're like, oh, look at the closet space and the light. Don't you just love the light in the space? Not that kind of stuff, but like investing hardcore into real estate, whether it's single family homes or apartment buildings or giant complexes, how to do all the cash flow statements and all the analysis that goes with that, time value of money. But even that is pretty basic. Really get knee deep into investing. And then all the way to the point where you're bringing in investors, whether you're developing projects or whether you're doing a syndicate or whatever. Like, imagine you did like 100-hour course with tests and everything, just on real estate, but from the finance point of view, not from like, hey, you can flip some houses and get rich quick. No, like take me through the pro forma cash flow statements over the next 5 years. Let's do some calculations, right? And how'd you, yeah, I mean, even things like how to negotiate with your bankers for financing, and then how to negotiate with your equity partners for financing. How do you actually structure the contracts and stuff like that? Like really, really, really detailed. I don't know if anything out there exists because I've never taken anything, but if I was going to create a course on how to make money, which is Forex and a bunch of other things, um, it should be that detailed, I think. So essentially, I'll teach you everything I learned at Harvard, but it'll be less than $100,000. Good deal, right? Good deal. So, um, but we'll do all the Forex stuff, and then I'll add on layers and layers and layers and layers and layers. Cool, I think. And you'll always find Forex is best. My sweet baby Forex. Forex is best. It's the least complicated and it pays the best. It's even taxed the best. I mean, even real estate's really funny. You get into this situation where you can never really actually sell. Because if you sell, the fees and the taxes eat up about 25% of your profits. So you end up exchanging. And then you exchange again, and then you exchange again, you exchange again, and you don't sell until after you're dead. It's kind of strange. I just like Forex. You're liquid all the time. Boom. And you don't have like, oh, well, if we only sold it today, we'd have 2 million in equity. But if we access that, it's going to cost us 1.3 million to sell it, pay the taxes, pay the fees, and pay all that. So now we only have 700,000. So I'd lose 1.3 million by selling it. So therefore, we don't actually have the 2 million in equity. But I need money to eat, or I need money to reinvest in another project. How do I extract that equity so I can keep building my empire? Well, in Forex, your equity is put into your account in real time. You're always liquidated. You're always completely liquid. It's ridiculous. Imagine, it's really a problem for a real estate investor. Think of it. Let's say you bought an apartment building for 2 million. You can sell it for 4 million right now. But then you lose $1 million to taxes and fees. Now you're down with $1 million. You're like, well, I'd be better off holding it. Now you have to make all this, like, how do I get out of this trade? I can't get out of this trade, but I got the equity, but what do I do? Hold it another 10 years? Well, then you're going to have to do more more renovations, more costs. You're like, oh my God, this is such a headache. How do I extract this $2 million? If I bought it for 2, I can sell it for 4, but if I sell it for 4, I get crushed. In Forex, you already got it in your account, baby. You're liquid. Pouring bottles of champagne. Yeah, I'm a Forex trader. You're like, woo, real estate, right? And venture capital's even dumber. You want to be a big VC? You're gonna invest into some unicorns. Yeah, well, most of those guys die broke. I was a venture capitalist once. It's a tough racket. Yeah, whatever. Forex is best, but it's good to know, right? It's good to know because when you're out raising money one day, your rich investor already knows about real estate because they're already investing. They already know about the stock market. They already know about hedge funds. They already know about other alternative investments. They already know this, that, and the other thing. You can't just show up and say, well, I know some Forex stuff, but all the other things you've looked at and invested in the past, I don't know anything about that. So then how are you going to communicate with somebody? Why should they invest in you? If they give you $1 million, they're like, well, I could easily make 12% if I just invest that with the stuff I've been going with. Why should I invest it with you? Oh, I'll make you $1 million. Forget it. Not interested. Okay? So the thing is, you have to structure your conversations in a way that you actually speak to your wealthy, sophisticated investors. And they go, oh, you'd do that for me? That sounds really good. And you say, of course it sounds good, right? But that means you got to know a lot more than about your 5A cross and your pivot points. Okay? Think about it this way. You want to be an independent plumber, or you want to be an independent contractor, or you want to be an independent electrician. You go to school, you learn about electricity, ideally, right? You learn about physics, right? How to hit a nail into some wood in such a way the wood doesn't fall down. Plumbing, right? Half of plumbing is about water, the other half is air. You don't understand those physics, you're not going to be a very good plumber. So you go through all of that and you get licensed and you pass all the tests and you're an expert now, maybe not experienced, but an expert in electricity. Or maybe you're an expert in plumbing, but you don't have any experience. Now what? Now you're going to have to work for someone for 3 or 4 or 5 years to show you know what you're doing. Scam likely. If I said it, then I meant it. But I'll probably never get it. I don't have too much to lose. I'm about to risk it all. Anyways, so now you got to work for someone for 3 or 4 or 5 years to prove that you actually won't electrocute yourself or your client, or that the pipes won't burst in the middle of the night, that you actually have experience. And then what? Now you're like, okay, now you got the education, now you got the experience, now what? Now you got to go off and start your own electrician business, your own plumbing business. You're going to start, you want to go out on your own and build houses. Now what? Now you got to learn how to start a small business. Now you need to know how to market your business. You need to know about finance and marketing and how you're going to manage risk, that if you hire a junior electrician to work for you, what if they electrocute themselves? What if they do the burn the house down by accident? Oh, now you need insurance. Now you need this. Now you need that. And now you got to go to the banks and say, well, we need 3 vans and we need, whoa, 3 vans? Well, let's look at your net operating income. Give me your cash flow statements over the last. Suddenly you need to know all this. And you're like, wow, I just wanted to be an electrician. Yeah, well, now you're a small business person. Oh, that also does electrical work. So anyways, there's a lot of layers on this onion if you're going to go from good to great, and from great to excellent, and from excellent to world class. But maybe we can do this journey together, huh? No, the swing group is not 11, it's 4. Okay. So, gotta go, babe. Gotta jump. This was real. Peace on earth. May the pips be with you. May your profits be above average. Huh?